Today is October 30th, 2024. Google's shares are trading today at $180 a share. If I had come to you yesterday and I told you that I will sell you Google stock at $162 a share, and you could sell it back to me today for $180 a share, the only question that you would ask me is how many shares can I buy? Hey everybody, today I want to talk to you about the Employee Stock Purchase Program. Now, this is a program that I was introduced to a few years ago at my previous employer, and basically what it is the company that you work for. Not all companies offer this, but if your company does, that's great. What it is that your company will give you the ability to buy its stock for anywhere between a 10 and a 15% discount, which is unbelievable. It kind of tailors back to what I was saying to you a moment ago about Google stock, is that if I told you that I could guarantee you anywhere between a 10 and a 15% return on your investment on anything, you would ask me how much money can I give you, which would be the right question to ask. So what I want to do today is I just want to walk you through a very simple example of how this program works and the mechanics of it, and why I think that if your employer offers this program, honestly, there's no reason why you shouldn't take advantage of it. I mean, they're basically giving you free money. So I'm going to walk you through an example of how it works, and I think it's going to make a lot of sense here in a moment. So here's essentially what the general scope of what this program is. So I'm going to go to my whiteboard here. So the way that it works is once you enroll in the program, the company sets a cap on how much money you can set aside to participate in the program to be able to buy its stock. You can't just give some unlimited amount of money. It's a cap. Both times that I've used it with my employers, it was capped at 10%. So every couple of weeks when I got paid, they took 10% of my paycheck. And essentially what they did is that once they took the 10%, they took it and they set it aside in an investment account. That money then accumulates over the course of 3 months. Usually these programs, from my research, both of my employers did it over the course of a quarter. So they take the money out of your paycheck. They put it in an investment account. It accumulates over the 3 months. Now, here's what happens. On the first day after the 3 months is over, what the company will do is that they will take that pot of money that you've given them and they will purchase the company stock at either a 10 or a 15% discount off of the retail price of the stock on that particular day. So let me walk you through an example. Let's say your company that you work for, the stock is trading on April 1st. So let's use the beginning of the year. January, February, March, they take the money out of your paycheck, the 10%, they put it in the investment account. April 1st comes. The company's stock is trading at $40 per share on the open market. What they will do is they will take the money that has been accumulating in that investment account and they will purchase the stock of the company using all of the money at $36 per share. Once the trade is complete, they take your new shares of your company stock and they will then put it into your investment account. Now, literally on that day, on April 1st, you have made either 10 or 15% on that money. If you were to sell it on that day, April 1st comes, you say, I don't need it, I'm going to get rid of it. On that day, you've made 10% or 15% on your money. Now, if you decide to keep the stock, now it's obvious, this goes without saying, but the stock can go up, it could go down, it could go sideways, whatever the case may be. So if you sell it, you've made the return on your investment. And if you don't want to sell it, you still bought the stock at a discount, at a pretty hefty discount, at either 10 or 15%. Now, one of the things that you got to keep an eye out for is this was one of the first questions that I had when I first found out about this program many years ago, is how long do I have to hold onto the stock after I purchase it? So if I set aside the money in January, February, and March, April 1st, they give me the stock at $36 a share. I've supposedly made 10% of my money. However, how long do I have to hold it for before I sell it? Now, with my employers, there was no holding period. So I could have sold the stock on April 1st and made the return on my investment of 10 or 15%. So I wanted to make sure that I didn't have to wait 6 months or 3 months or a year after I had already bought the stock to be able to realize the gains. So that was a pretty important point that I was happy to find out about, that there was no holding period. I could have literally sold it on that first day and I would have made a nice 10 or 15% return on my investment. There is one other thing that I want to mention about the price of the stock that I feel is relevant. So some people are very sensitive about the dividend yield of the stock that they own, right? And so another reason why this program makes so much sense is, let's just continue the example that I was talking about here with the $40 and the $36. Let's say this company that you work for, let's say the dividend yield was at, it's kind of a high yield example that I'm going to give, but whatever, it's just a round number that I'm going to use. Let's just say it's 5%. Let's say the yield was 5% at the $40. When you purchase, this is obvious, but when you purchase the stock at 36, the yield that you're going to get on that dividend is not going to be 5%. It's actually going to be 5 point something percent. I don't know. I didn't do the math, but your dividend yield is obviously going to be a little bit higher, because if you're buying the stock at a cheaper price than the retail price of the stock, your yield is higher on the money that you're investing in that stock. So this is just another added benefit of this program, is that not only are you buying something at a discount, but if you decide to hold it and your company pays you a dividend, your dividend yield is going to be higher than if somebody just bought it on the open market. So now you may be asking, what's the downside of this? There is only really one downside that I saw while I was using this benefit with my employers, is that when you are setting the money aside for the course of those 3 months, in January and February and March, when the company is taking that money out of your paycheck and they set it aside in this investment account, you cannot touch that money until the stock has been purchased on April 1st, or whatever that first day is of the next quarter. If you decide that an emergency, let's just say, for example, an emergency happens or something happens and you need that money, you can pull the money out of the account, right? Because at the end of the day, it's your money. It's not the bank's money. It's not the brokerage's money. It's your money. You can pull the money out of the account if you needed it. However, you have then forfeited your participation in the program for that specific quarter of the year. If you're watching this video, I'm sure that you've invested your money in other places. I don't know of any other place where you can guarantee yourself a 10 or a 15% return on your investment anywhere. Not even a CD, which would hold up your money for months and months and months at a bank. Not even a CD gives you a 10% return on your investment, or 15%. So if your employer offers this program, I highly recommend you learn about it, you figure out if you can budget for it, you can set some money aside. And if you do this throughout the course of the year for 4 quarters, and you're able to take $1,000 or $2,000 or however much your company allows for you to set aside over the course of the year, all the money that you would have contributed into the stock purchase program, all of it would have given you a 10% return on your investment. Obviously, if you just sold the stock on the first day. If you kept the stock, it's not a discouragement, because you're still buying the stock at a deep discount as opposed to everybody else. Do yourself a favor. If you work at a company that offers this program, learn about it, study it, and if it's something that you're interested in taking advantage of, I highly recommend that you do so. I really appreciate you guys watching this video. It's my first video that I'm going to be posting here on my YouTube channel, and I'm going to be talking about everything, business and stocks and investments, personal finances, all that kind of fun stuff. I also have a newsletter that I send out every Wednesday. So I have the link in the description to go to my website so that you guys can sign up for my newsletter. Click that subscribe button, hit the like button. Hope to see you guys on the next video, and I really appreciate you guys spending some time with me here today. See you next time.